Okay. G'day, Pete. Hi, guys. Give me a sec. Coming through okay. All good. Can you hear my beautiful voice? It's one of those days, I think. Sorry about yesterday, by the way. Had a few little issues around that time, so I just didn't. I had a few issues earlier, and I just didn't get around to actually getting organised. So, yeah, Jason. So, yep. Sorry if you were hanging around waiting for the stream yesterday at 12:30. I just didn't have a chance, so I thought I'd do it today, and we're back to usual, or back to the norm on next Monday. So tomorrow will be the 9:40 stream. G'day, Peter. 9:40 stream, and same days after that. So what I'll get into first, well, firstly, welcome to Trade Setup on the live stream. Just remember, it's only there's no personal advice here. This is just all our opinions. So just jump onto YouTube to read through the bits and pieces. Feel free to jump on our website too. Take a look through tradesetup.com.au. There's all some bits and pieces on there. I've got to just update. I think I might have said that last time. So there's all some updates we're going to do on that, just on the resources page. Any ideas you might have, feel free to send them through. And we'll put together some videos. Anything that actually, that's not a bad idea. If there's anything regarding technicals, especially, that you think I can help out with in the way of explaining how I look at it compared to others, just send through an email, support@tradesetup.com.au, and what I'll do is put together a quick video if it seems like it could be really useful. So firstly, I'll get onto find it, there we go. I'll get onto the SPY. It is ramping up. So I found this one hard this morning. I was actually expecting it to pop. So anyone that's follows with the alerts, especially, you would have got the alert out this morning saying, levels that we're looking at, what sort of price action I'd be looking at. But at the moment, I actually thought that was the open, I think, 950, yep, open here. I thought it might have popped up, washed out, and then pulled back to give you, a decent sort of a high low to work off. Problem is, it didn't. It opened lower, and you can see this price action, even though, the problem is why I didn't go short. I was thinking about it at one stage, but what you want if you're going to go short off something like that, especially when that you can see that momentum's been clearly upwards all session. If you think that's going to, essentially, if you think it's going to roll over, I want to see that wash out on the upside. Okay, so what I'd be looking for to go short is essentially that washout, and then I'm going to do that, and then a lower high. Don't know what I'm doing. Lower high to work off a deep correction, but that's probably going to take time. A bit of a flush, and then you want the market to try. And you want to see that those attempts and that failure to get back above that zone at 60.18, and then you get the lower high coming into play, and then sooner or later, if there's enough buying pressure, as in there's enough buys in there to get squeezed out, it could trigger a bit of a sell-off, and then you've got all these buyers lined up, from overnight to get squeezed out of the action. Now, instead of that, which I was expecting that flush, I just want to see the flush, and then I was actually looking for that pullback, so I think this was quite strong. I thought there's a good chance that we just keep charging higher, especially with, if following the news and following everything, basically the macro environment. At this stage, it's irrelevant any negative news. It could be building, and then we get this sudden beating down the track, which I'm not banking on it, I guess, but that's what I'm expecting. Problem is, there's always those, the next couple of weeks, the US is looking at more stimulus. So I think any sort of serious sell-off is going to be holding over the next week or two, unless, of course, there's too much argy-bargy. It looks like it could not come through. That might be the end of the $3 and basically the end of that support, and then people may be tempted to start locking in some gains. On the upside, you've also got Europe bashing out their stimulus package, their fund, and that's sending the US dollar down because everyone's piling into the euro, and it's also that backstop. You got European backstop, you get the US back. All federal governments are just starting to throw money at the table. So as long as that doesn't stop, why would you be looking to sell everything just yet? There's enough negative news out, and Australia, we're going back into Melbourne's and just about into lockdown again. I don't know what stage we're at the moment. Sydney's going to have some problems, I'd say, soon. I think there's got a lot of the US has got some serious problems still. They just seem to be, pushing that aside at the moment. So there's enough negative news. Jobs, there's still more people looking for unemployment benefits in the US. I think that runs out, is it in 2 weeks? So they have to do something with more stimulus in the way of unemployment stimulus, if I got that right. Anyway, so there's enough headwinds that you would think would push the market down, but it's just not going down. So at this stage, we're still looking, they're looking at the full recovery, and the market's just getting buoyed. Now, the NASDAQ took off last night, and that's pretty much what I'm expecting. Dow didn't react too much. Dow was pretty much flat. Dragged the big S&P, which is the broader market, higher. And that's just a bubble. Well, the way I see it anyway, it's just a bubble waiting to burst. The tech stocks in the US. But it's not something you ever sell into, trying to pick a top. And the problem is, if you try to pick a top, I don't think you'll know it's coming. It'll just get hit. So that's my take on the NASDAQ. I don't think it's going to be nice and pretty where you're going to get this distribution, like you're normally looking for, say, the market's charged higher, and then you start to get this kind of thing where the market's starting to distribute, and then you start getting weakness come in. It's not going to be as pretty as that. I think the way it's gone, the way it's charged up, it's just going to come screaming back down, if that's going to happen. I'm not saying it's going to happen, but if that's going to happen, then you're going to get some weight on the S&P, you're going to get some weight on the Dow, all that sort of thing. So, yeah, it looks like the market still wants to charge high. Now, that's your SPY. It just took off. So what I was saying, really, that the fact that we didn't punch up through that high like this and pull back and hold an inside level, which is ideally what I've been looking for. If I stretch this out, what I would have been looking at, and it's the same on all markets. It happens a lot in the indices of something like that, and you get this deeper correction, and then buyers starting to support. That's what I was looking for longs. It just didn't play out. So I just want to see that clear the way, pull back, hold an inside level, essentially on these MAs, and then go. What it did instead was just hold down, and potentially that you can see the action on, especially on the 1 minute chart. That was bearish. It was looking bearish. It was holding below these MAs. The problems were squeezing in. So it's coming to that point of agreement, just in a funny roundabout technical setup way, if that makes sense. It was looking more like a sell than anything else. I just couldn't bring myself to sell it. There was no clear, defined lower high like this, and there's no washout. I want to see a washout, and it does two things: cleans out some buyers and puts some buyers back on. Doesn't clean out buyers. It cleans out some sellers, stop outs. It'll drag some more buyers in, and that's enough fuel that if you can come screaming down and produce that lower high, then that's just all the fuel you need to really start to squeeze on these buyers that have been building up here. And it just didn't play out that way. It was just looking too strong. And then really, for me, I haven't seen a clear setup to go long, especially on the 5 minute. The 5 minute's a bit of a mess. If we go into the 1 minute, so even in here, when it started to lift, once I was looking at that, thinking, okay, we could get some buying action. Back up here, I wasn't keen on taking that. You can see it was grinding, sell, and then eventually it took off. Then you got this high. If you're buying on the break there, you've just been stopped out. Buy back up here, you might have been cleaned up here, and then we're starting to go again. So it was a tough gig on that. I didn't touch that. I did touch Hang Seng. On this, it was basically this green candle here. And if you go down to, if we look at it a 1 minute, that was a long. So I was looking at that strength to come in. It was just in here. You can see that break of that high there. You got the market creeping down off the opening highs, just flushed out. That was the opening low, 11.15. Flushed it out, went, popped up to get that nice strong green candle. To me, that's a second round, is going to attack those highs again. So that was pretty much the only trade I got going. And since then, that's what I had up in these highs. I think I took it off for only 25, 30 points, something like that. But it's been kind of choppy. And if you go and look at the 30-minute chart on the Hang Seng, it's a bit of a mess too. Not a mess, but don't worry about that candle. There we go. It's really stretched. It's stretched up here. Where you look at the CCI, which you look for to see whether the market's stretched. The momentum's up, but it's just grinding. It's not out of hand on the upside, which if it's starting to get stretched up here, you might, at least if this is going to start to go high, you want a reversion to the mean type of trade, and you want to see that bouncing off and finding support, whether it's this at this zone again at 25,260, you want to see it at least finding some support and giving you the opportunity to say, okay, we're starting to roll up, and we're going to attack some of these lower highs from this move down. But instead, it's just, it's stretched. So to go long up here is probably asking for trouble. Unless you're going to be quick. If you're going long for it, like I said, I did go long, but if you're not going long on the open and the market starts to settle down, and then you're going long off something at this stage, I don't think that's a high probability setup. I think it needs to flush some of these buyers out. Maybe I'd pull back on it, especially on the 30-minute chart, and then just see what happens from there. But it's at the moment it's still chopping around, which is, there's no real direction, and there wasn't any much direction yesterday. I think during the day session either. That might have been it there. No, that wasn't it. Let me just see. Oh no, Tuesday the 20th. So that was yesterday. No, that was some good action there. It was just it was chopping it and bounced all the way back, and then it was really chopping around. So anyway, that's the Hang Seng. I'll go over the Dow. Whoop, not really working. I thought it might have started to roll over there. I was looking for something to start pressuring down on this 26,708. I've got a feeling this could be holding up here. We might get a lower high coming into the European session and just pressure the market down, potentially looking to a move down to 26,673, these lows. But I'll keep an eye on that. Pound, I thought I'd pop that up there as well for a potential opportunity on the downside. But I was looking at the half an hour chart, and this chart, you can see this is a 4-hourly chart. So probably it's going to be not much different on the daily. You can see, we're being supported here, along here at, what's that? Whoops, just make it a bit bigger, around 121.50. And the market's chopping around here, tried to flush through, held the high low, started to charge higher, then we got that big pullback, and we started to go. And recently it's been consolidating between these high and low. Highs up around 26.71 or 70, and lows around this zone at around 125 even. So it's a decent enough, move. If you can get a sell off there, you can probably pull out 20, 30, 40, 50 pips. And if it goes range bound, if that range bound continues, you're heading back down to 125. But that 4-hourly chart looks more likely that you might get a bit of a sell off here. But if I'd be honest, I'll probably be looking for something to hold and then go again and start attacking these highs up here. All right, so the 30-minute was looking a bit better. It is stretched up here, which you could get a short trade off that. Let's just show you now off the 30-minute and even drop it down. But it would have to, I think, if it's going to open up around what Europe opens about 4, it could flush down, and then you'll get a lot of shorts come in and then jam back up again if it's going to go. But we'll just keep an eye on that one. I would ideally like to see, I would just draw it up on here, the lower high come into play. Anything. That little pop up there, that's not so bad. If you're getting that pop up there and it consolidate, that's going to drag in some buyers now during this period before the Europe opens, and then it could be the fuel to get squeezed out. They get stopped out and they move down, and then if it's decent enough pullback, and then we get something up here to work a short off, then good. But if not, I don't want to see, you don't want to see this little minor pullback and then look for a lower high, because to me that's just going to be something like this, pullback and then whoops, and then go. That makes sense. If it's on a smaller scale, you want to see this decent pullback to really put pressure on a lot of these buyers up towards that high. And then you know that once it starts to bounce, there's going to be all sorts of time frame traders looking, okay, this trend up is going to continue. It's going to get jammed up. Look at it washed out that level. Sorry, I wouldn't say wash out. You can see they'll be thinking, all right, this pullback, buy into that pullback, we're going to jam up through, because it did pop through that level at 120, was it 126.70? So they'll be looking for longs, and then if there's enough of those, turn around and get squeezed out, then that could start the momentum of all these longs that are built up. So you want to see enough at those highs, enough buyers, late buyers anyway, to the party, get put under pressure. Now, if they're not getting put under pressure with a little minor, essentially, just draw that up, essentially off these highs, starting to do something like this and bouncing around there, don't expect a big sell-off from there. Expect maybe more of a flush and then jam back up again. Okay, so it's very important, especially if you're looking for trading off key zones, resistance, and it's pushed up quite hard into that resistance, or the same on the downside. It's fallen quite hard into a support zone. like this, you want to be working off your shoulders, we call them, or your high lows, lower highs. So I think they're a much higher probability setup. There's a few key points to just keep an eye out when you're trading off those shoulders. You know, you're not trading, you're not looking at the minute detail, thinking, oh, that's a shoulder, I'll go short, and then all you're just going to get squeezed when it bounces back up. I hope that's making sense, guys. Any questions, just whack in the chat and get ready to put up some, you know, if there's anything you want to take a quick look at, put it into the chat, all the codes, whatever it is, and then we'll get into it. I'm just going to go through Bitcoin. I find this kind of interesting. We put up an alert, I think it was yesterday, to buy at 95 with a stop. You know, it's $500 stop. I mean, it's all got to do with your, that's where the stop is. Just adjust your risk. You don't start doing your normal size of 10 grand trade if you're going to get stopped out for 2 grand or something like that. You do $500 risk. So whatever your risk is, adjust your exposure with regards to these levels. So that's what I'm looking for, and it's more, probably made a mess of that. I wouldn't mind doing, actually we'll go over here. I'll just get it on the trading view. Here we go, let's get over to Bitcoin here. I want to show the bigger time frames. It looks quite interesting. It looks like it's ready to go, and well, it looks like it wants to go at least. So if I get over to, what am I on here? It's a 30 minute. Let's go to a daily. You can see that resistance, you know, that's the high, touched on there. And if you take that through, it's touched on it recently too, back in was the 31st of May. Okay, it spiked up there. So you can see this selling, excuse me, especially after a big flush. Now, after that big flush lower, anyone that's been buying it up here has just been cleaned out. If you haven't and you're holding on for dear life, you could get lucky if you bought it, you know, especially if you bought it anywhere down here, you bought it off those MAs. If you bought it in here, you'd be fine. But anywhere sort of basically above that green line, which is a lot of people, if they haven't got squeezed out and put back on the sidelines and re-entered, then they could be lucky. Like I said, I mean, it's not the way to trade anything. But the fact that we've had that big flush out and we look like we're consolidating just below that 10,200 mark, suggests that we could at least spike up. I mean, this is the trade, even if we hold on to that high, you know, you're buying at 95 and you only get to 98 before it starts to reverse and start sweeping out all these longs that are built up through here. That's fine, because we can get in at 95, it starts to fail at 98, it's $300, tighten up your risk and still make it a profitable trade on the smaller time frames. But if it starts to get up to, and it starts testing to 10,300, for example, what you've done, if you're just breaking that longer term downtrend and you're looking like the buyers are starting to get into control, and you know that there's going to be a hell of a lot of stops based above that, buy entry stops, buy exit stops, but they're going to be placed above such an obvious level at, say, 10,500. So it makes sense. So you know that if they get triggered, bang, off she goes. You would expect at least to get some sort of spike higher, or start to get some sort of momentum. Then you're looking up towards potentially, you know, 12, 13, or whatever it may be. But I think it's getting interesting. I mean, say it doesn't work and it just rolls over. So we pop up here, we take out this 95 and it fails, so be it. I mean, that's the nature of trading. You get in, doesn't work out, and you get out. Okay, if we look down, so what I'm going to go down to is go down to an hourly chart. There's this action here. If you're just looking on that hourly, so that's that. I'm not really showing it too well. See that downtrend there, off the same level. So, you know, spike higher. That's on the daily, and that's the daily trend down that we're looking at. If you want to refine your entry, I don't see any reason why you can't, with a move up potentially through 92. You know, as long as this level holds, as long as this high low holds in here, you got key high lows. We've got a potential setup. You can start refining it as much as you want. You've probably got these 3 spikes, and if we take out even 92.20, 92.50, you're buying, or you buy it. Oh, what was that? 92.20, for example, just above this little high. I'm more inclined to buy above that high at 92.50. Hold your stop at around 91. So it's only 150 points, and you could get in nice and early if our other trade plays out. Does that make sense? So you're looking for something to break a 90. This could be the start of a move up to at least test through 95. All right, and if it doesn't, if it fails off 95, we might get stopped in and straight back out again. Stopped in, and it turns around and starts to squeeze lower. We've got something on from down here potentially. It could be up $200. All right, so you can see the thought process behind Bitcoin. So anyone that trades it or is interested in watching it, just keep an eye on that price action. It's a really good, even though it's a cryptocurrency, it's a really good, just looking at that analysis. You've got these lows stepping in support, reacting off that low, reacting off around, say, 8,900, 9,000. And then it's come down. So if there's weakness stepping in, you've got a accumulation down here, and then you've got this key high low around just below, say, 90.50. You've got to take them into account too, because anyone that's been selling is potentially, there could be some shorts building up, because it's just as easily shortable as going long, buyable. There could be some shorts that have been building up here, and they're ready to get squeezed out. I mean, we don't know if that's going to happen, but there's enough staying here. You can take that back. You can see that it's being rejected off the low, rejected off the low, rejected off the low, all that rejection. Then it started rejecting at a higher level, and you can see that starting to look like it could curve up and attack up through, like I said, 95 and so on. Even these you can take an inside level at 93.50 thereabouts. So just watch the action. I think it's starting to get quite handy. I mean, I'd rather see that start to hold above the MAs. I'd like to see it start to break. And if it can't hold, if you take this an entry through 92.50, for example, you've got to be on guard that it's not just going to fail quite quickly. But I mean, like I said, you're only taking a little bit of heat. So this could be the first entry if you're looking to build a position into that, into a break of 95, for instance, and a move up through 10,000. That could be your first. If it starts to hold, like this, you get in nice and early, breaks up, another entry here, this consolidation through here, something like this, high, low again. Okay, you buy your second parcel and see if it can continue on and break through 95, or 95 could be your second parcel, for instance. So it could be a good little zone to work off. Anyway, that's just what I was looking at in the way of everything bar stocks. Just want to get out of Bitcoin, see what that's doing. Get rid of that. So we've got all, that's Wall Street. I mean, it's not looking, there's a potential that's going to hold a lower high, and we're going back down to 26,673. So just keep an eye on that, which is good. 100 points. So no, it's not. 50 points away. So it could be a short in that if all goes well. All right, here we go. So maybe the Hang Seng is potentially, it's nearly 1 o'clock, so that closes an hour. They tend to drift in that last hour. Once it's picked this direction, the Hang Seng doesn't do too much between 1 and 2. It can. Like yesterday, it started to hold. There's someone supporting it. It's getting bought up. You can see these high lows in here. That was your little flush that I was looking at. That was your flush lower. It was pushed lower, supported this charge higher, come straight back down. Any sort of buying, any selling coming into it started to wear out, and the buying was constant. So you're either going to get one side or the other, especially from 11:15 in the morning till 2. It's generally it's picking a direction on the Hang Seng, which is good, because if you can get on the right side of it, you can make some money. Obviously, there's not too many times it's been really caught stuck in a range. A couple of days ago, I think it was, maybe on Friday or Thursday, it was stuck in a bit of a range. Yesterday, it had a bit of charge lower. We got on the short side of that, I think it was, and then it's turned out all right. But today, popped up. You can see just prior coming into the open, this is the CFD price. So once it opened 11:15, the futures had a bit of a sell-off trying to close that gap. Got soaked up here, soaked up again. It just seems to be that sooner or later the sellers will give up. Okay, but the reason why I've marked up this high, I like that rejection there. So there is a chance that if it starts to drift down through this level, was it 25,400, say, off a lower high, there could be some long squeezed out, but it may be muted coming into that 2 o'clock close. All right. Any questions on anything there before we start getting into a few stocks? Is there anything that you want to look at? Anyone wants to look at there? Just put the code in. whether it doesn't matter what it is. Where am I? There we go. So for now, we've got 4 on the go at the moment, and BKW is giving me the irrits. We've got ORE, Regis, ORE, BKW, and SLC, which just kicked off today through 13.5. It's just down a bit slightly now, but you can see that looks quite good. If we can start to hold and drift, really hold these MAs, which is the important thing. Start to take out some of these lower highs, which it did today. I'm expecting that to charge up, hopefully get up and through 120.25, thereabouts, and see if we can get to some of these. You can see that even on the weekly, that's nice that it's holding the MAs on the weekly, the 20 and the 50, which looks like it's set to potentially go up to this 175 zone. Whether it does or not, I mean, obviously, yeah, BKW, you're right. I'm starting to question that, and I'll show you why in just a second. But you can see, is this big enough? I'll get onto a bigger chart. So this is, like I said, this is super loop. So the fact that it's got through there, if we can finish with a strong move into the close, it's up 91. And they tend to do that. You can have the market can easily spike through a level, trigger some entries, and then consolidate during the day and rally into the close. Especially, the fact that we're up 90 points. If we hold these gains into the close, there's going to be the ETF's going to be sweeping the market. So if this is, I don't know if this is an ETF or not, if this is part of something, but they'll have to be probably sweeping the market, and you might get a nice little close, into 4 o'clock and into the match as well. So that expect some good things. If not, we get stopped out. So be it. If it comes down from here and starts taking out those lows, we're on the wrong side. Something's going wrong. BKW. Now we are consolidating here. So there's 2 ways a trend can happen. It breaks, consolidates sideways as the MAs catch up, and it sits on the MAs and goes again. A lot will pull back to the MAs and go again. You can see that the action on this it's still quite good on the daily. Pop up above the MAs, set on the MAs, providing support. That breakthrough there. I'm not sure where entry was. Entry was here somewhere. I think through 22, and that your high low broke, and then it's basically done not much since then. Which doesn't really matter so much. Could be getting accumulated there. There's not a big amount of volume in that selling either. You can see that even though it's holding, which is great, if we start to break up through 17, expect that volume to lift, because that's some breakout traders will be diving in, and we're looking for a move up to $20 if that can start playing out. The problem I'm seeing is the weekly is sort of in that extended level. Big sell-off here, bounce, looking for that secondary bounce, and if that's running out of steam on that secondary bounce higher, then we might want to tighten up those stops, because I don't want to close it. Where's my mouse? I don't want to close it because there's no reason why. The mouse is gone again. There we go. There's no reason why it can't keep charging higher, but you don't want to take too much risk on it. So I think I've got it at 15.35 for now. Can't remember. We'll just see if we can get through 17. I'm happy to move it to around 16, just below these lows. Even tight, put it to entry, because it's not convincing me that it wants to kick on. RRL, Regis, is looking. It's a grind. There's a lot of stocks at this stage. They've had this big bounce, sell off in March, bounce straight back, and they're grinding at the moment because there's bulls still out, obviously. Buyers are still happy to jump in and support prices, but we're getting to that level where we're starting to get extended back into these highs. Right, so this is where we have to be careful. I want to see that. I want to see a pop into 6 so we can book something at least, at least a partial, and then if it does cave in from there, so be it. And I don't want to be taking too much risk on this either. I think I might have this at entry anyway, if I'm right. Let me just check that. You might know, Pete. I'm not. Check my spreadsheet. 35, yeah. So stop losses at break even anyway. That's all right. So I don't mind so much. I just want to try and book something. I don't want to be giving away these gains. It's probably only about, what are we up? Just 6-7% at this stage, which is good. But if we can just get that little bit extra pop into $6, then it could be time to lock away some gains. RRE, that was the other one. That's looking, that's great today, that little move up. So if we can get, so what I'll be looking at, just get my drawing tool. We've got we've got this high. So this is what I'll be looking at on that one. It's extended, but the fact that we're into new highs, it's more of a momentum play. So it's not, if you get extended into a high like that and start to fail off it, that's where you're going to be concerned. But if you don't, if you blast through it like we have today, essentially, I'll be looking up to these highs, somewhere up here. So if we can get up there, that'd be great. Right. So they're just trying to figure out whether, that level there at $3, it's just got through there. It's hard because I wouldn't mind taking some profit on that too. If we can get, we're at 306, if we can blast through 310 by close, just be wary. I might look to book some gains on that because it's up about 10% at the moment. Wouldn't mind just locking away a partial on that one, just considering my bearish tone to the overall market. Right, so at the moment, there's nowhere really we can tighten our stops to. Probably best is 65 thereabouts. We might do that. At the moment, I think that's at, where are we, 250. So I probably will tighten that up a little bit more this afternoon. Just get it below this. You can see that it's spiked up, held a high low off here, especially with that strength come in. I want to tighten that up, but we'll see. All right, that's probably, was that all the positions we got? We got one more. SLC did that. All right, BKW, yep, so that's it. All right, so is there anything you want to look at? There's not too many shares at this stage that I've got my eye on. I think a lot of them are just, they're not producing the goods as what the setups in the way anyway that I would want to see. Some of these I've had in the list for a while. And so we've got a daily. So what I'd like to do is look at the daily and the weekly. Anything looks promising, you can drop it down on the half an hour chart or so just to get a better understanding if it is bullish, and you can get it. And the reason I'm doing that now, when you're in a bull market, I think I spoke about this with Peter a while ago. In a bull market, the entries are a bit clearer. There's not as much volatility, and you can just sit on a daily and a weekly on a weekly chart. But on times like this, when the market could turn on a dime and drop, I don't want to risk too much. So I'm using the 30-minute charts to refine the entries. It does two things. It refines your exit if you as long as it's not a stupidly close level, but a fairly good level where it's tested a few times and starting to fade off that level, rally off that level, sorry, and then you can really reduce your risk on it. But it also refines your entries. You could easily get a better entry when the momentum's up on the 30. It's in a good spot on the daily and the weekly. The weekly's rising. It's pulled back on the weekly and starting to lift. This one's not. Like something like this, if we get a pop up through that level at say 350, and the 30-minute chart's looking really good, then you can just refine your risk and refine your entry rather than waiting for that break of 450, for example. You can get in somewhere around 350 or just below 4 and get 50 cents better, which really looks good if it starts to kick on. And that's ideally what you're trying to do in your trading all the time anyway, especially intraday. So intraday, what I'm always trying to do is go, well, if that level gets attacked, on the upside, I know that's probably going to trigger a lot of buyers, your retail traders that are going to buy it because it's a break of a key level and so on and so forth. So I'm always looking for something a little bit earlier. So if I'm wrong, it doesn't kick on, I could lock away again at least. And if I'm right, I just get a better entry. It's a little bit more risky, but if you know the price action and what you're looking for, that sort of tried and tested price action, the payouts are a lot better. The risk is a bit higher. But so I mean the risk is in whether it works or not so much the risk you're taking on any one trade, because the risk you're taking on the trade is going to be smaller generally. Right, got a bit ranty today. Sorry about that. Let's get on to NEC. Pete, that's a good one. What did you come up with last time, Pete? It was cat. Cat's going well too. So this was you popped that last time. It's doing quite nicely. So that's good. And if we go, I just want to the weekly on that cat. The weekly is not as impressive as the daily, and the fact that it's sort of sideways. You can see just the averages are sideways on the weekly to down. I mean, it has swung up here. It's decent enough. The good thing is that pullback there is a good enough area on the stochastics too. You know, enough selling pressure's come in, but it's been held up quite nicely above $1. And then go down to your daily, and you can see these high lows starting to come into play, which suggests that we're going to get a bit of a run to 170. Right? I mean, it could easily run out of steam, and that's why you're managing your risk, but it looks not too bad. It's a bit, what I don't like is that hard sort of rally, hard pullback. It was getting soaked up through here, but nothing too significant. All right, so I mean, if we start to just edge up from here to be nicer, I'd rather see a pullback, board up, or a pullback, board up, and that. Just want to show you something a bit like this, not as steep as that. I mean, if it's going to jam up in the next few days to 165 or so, I'd be inclined to think that's going to be a double top or anything. So I'd be really on guard. Anyway, NEC. NEC is a bit similar. The fact that it's just below, pushed back below on the daily on the MAs, this is an uptrend. Sit on the MA, sit on the MA, sit on the MA. Once you start getting below it, that's more of a corrective action. So that you've got to flick to your weekly to see what's happening on your weekly chart. Now, the weekly, it could easily break through 130, and that's a lower high. That's your shoulder. Big rejection of 160. The pressure's still down. So you're sort of saying two things at the moment. So this is your weekly. Actually, I'll just take a bit more. I'll draw that up for you just to explain what I'm talking about. So things like this, it's not like it's not a buy. It's just, if you're going to buy it, be wary that all right, if I missed something. That's today. That's right candle. Yep. So just be wary that we've got a big, obviously clear resistance zone up there. Okay, maybe it was looking good. Maybe it should have held there, but you got that big sell-off. Either way, the market's come smashing down. Right, so you got the lows down here. This kind of action is a bit of a grind. It did go okay, and then you got this big rejection here, which is not. It's not really something you want to see if you're going to get continued bullish action. Big rejection there, and then you got a couple more red candles. A bit more selling there than we've seen before here and here. Okay, that red candle there, indecision. So this next, we call it a spinning top or whatever, is something where bulls are stepping back in nice and early. They're not waiting for it to get lower. They're stepping in early at the top end of that little pump, push up. In the top third, how we always talk about, that's your trend up, that's your pullback. So that's the way I split it up in the strength. Bottom third, if it pulls back into the bottom third, you might want to just give it that's not the sign of too much strength. In the middle third, yeah, that's a lot stronger than a deeper pullback, but a shallow pullback off that high, that's your leg up. Shallow pullback, when you start hanging around the top third of that move up, is a lot stronger, and it's going to lead to, I just always do that, another good move up. Okay, and that's pretty much what happened, give or take, on that first move up. Second move up, same sort of thing. It's holding within that top third, broke up again. But then all of a sudden it's come crashing down. So it's pretty much, let me just take all that out. This is I want to clean up. There we go. It's come back down to pretty much the anchor to that trend up, which is a bit concerning because we start getting a breakdown through there and we don't get through these highs. I'll be looking for a short. That looks more like a short on the weekly anyway. So ideally, you want to see it get back up to sort of 160. I don't mind if it doesn't get to the highs on the weekly, and then start to get sold down. But if we start getting struggling at a lower level, well off this high at 170, then potentially there's some selling coming in, and we might break through 130, and we might get a sell down to 110, or even right down to 80 again on the short side. So that is all because you've got this overhead resistance up here, big sell off here, good bounce back. We bounced back quite a bit of that move down, and then we're starting to get weakness again. It could be that there's, either we're not going to get through back up to the 210 mark on this one move up. We may have to just wait. We might need a flush down, put some of these buyers back on the sidelines, and then start to build again. And then if that can build from there, deeper pullback, it may take us back up to 210. But on the weekly at the moment, that doesn't look too crash hot. And it's just because of these last few weeks, struggling in that deep correction off there. It's sort of the first, we might get a big correction of this leg up, if that makes sense. But it's something, it hasn't played out yet. But in saying all that, it doesn't mean that this can't hold. On the weekly, it's just, you can see that sideways action is a bit of what do you call it? Indecision. All right, so that's not decisive move. If that was a bullish market, bulls are in control here. Sudden sellers starting to pile in or jump in, whether they're piling or not. There's not massive volume in there, and then all of a sudden the bulls are just taking a break. They've gone from being bullish to just, I don't know if that makes sense, because it should have bounced there. We should have get a big push up from here. We've got 1-2 legs down, should have pushed up, built a higher low to work from, then go. But instead, we sort of went straight down below the MAs, and we've just been consolidating sideways for the last month, which is not the best of signs. So looking at that, I would like to see let me just get onto that. Oops, all right, I've got it anyway. So I've got a fancy mouse that jumps onto my laptop as well. Keeps disappearing off the side. Keep forgetting about it. You don't want to break through those lows. Ideally, you don't want to break through 135 at all. I would rather see a good day, maybe, and any sort of selling pressure after a good sudden spike up, but not up to these highs, obviously. Somewhere around 150, 55, we can spike up like that. After that, I do not want to see a move all the way back down to 135 again, because it's a big flush and then there's selling pressure coming in, or there's a distinct lack of buying pressure. You want to see that pop up. After that, you want to see some more buying pressure. Okay, you want to see the buyers continue. Okay, continue to soak it up. You don't want to see just a pop up and then pull straight back again. All right, otherwise that's not convincing me at all. So we'll see how that goes. We'll keep an eye on that one, Pete. It's not too bad. All right, WSA. All right, so that's good. The fact that I like this. Just go back a bit. It's come a long way in the last few months off the lows. And I'm only looking at that because I've got a bearish tone, but maybe you say that, that sell-off was overcooked. We're back at fair value, even below fair value potentially, and we're looking back up to these highs. Great. Go to the weekly. The weekly's probably, for me, painting a better picture. Although, barring the sell-off drove it back down through support. It was already not looking the world's best anyway. But there's a clear support at $2 or thereabouts, give or take a few cents, 10 cents or so. So it's traded off there way back in 2013, traded off there, held up again in 2016 and 17, 18, 19, and it bounced. We had probably that move through got exaggerated because it wanted to just charge through those lows. So if you're looking at it on the way down, wanting to buy it, you'd probably let it go through the lows because that's going to trigger some selling, and then you get a much better price. You don't sit ahead of it. You sit and watch it to see if it actually gets through. And it did. Jam through, bounce back against us. And then you can see this little inside level, which was about here. Pop back up, held again, and it started to rally from there. So in essence, if we're going to back, at least somewhere up to near these highs, the best estimate you can be looking at is, say that's it there, just straight across the highs that I'll be doing, looking at there. If you're going to look for a trade off the daily, which is perfectly fine, it looks like it's setting up. banging it through there, your risk is not very. You're probably looking to somewhere around 320 or thereabouts, give or take, above 3 anyway. Now, if you get the entry from, go back to your daily, break through that high, 275, say 280, as it's holding higher levels, it's holding off those MAs quite nicely. So if you get that sort of break up through there and it continues on, you've got minimal risk. You might have a 20-cent risk for potentially, 20 to 40, 1 to 1 or 2 to 1, which is great. That's fine. If you get a 1 to 1 on that, at least you can cover your risk and potentially lock something away. And if it fails from there, great, you cut it. But if it doesn't, what you're looking for is that one that's going to kick on. And if it kicks on, it's going to trigger a whole lot more buying. If it kicks on and you forget about what we just drew up there, you forget about this downtrend, and we're starting to get up towards 350, then you know that longer term there could be something big on the cards on the way up. And we're looking up here as well for. So that means it opens up a kind of a small risk trade, and you're getting on the right side. And if it fails here and we back off from there, okay, you can get a break-even trade potentially, especially if it gets, we do push up there, and if it fails from here, then so be it. It just fails from there. It's something that it's worth the risk, but it's something that's it's just part of trading, I guess. Does that make sense? So that's WSA. Anything else you want to take a quick look at? Otherwise, might just call it a day early there. Just look at. So I'm just interested where these are. So look at the Hang Seng. It's still holding up at that level. It's what we were saying before. It starts to get stuck. That move up is just any shorts building up here, clean them out. The Dow is okay. So it's just been dragged down by the Dow. Be interesting to see with the Dow if we can hold this inside level anyway. That's what I'll be looking at. Hold that and see if we can get a bit of a sell-off in the start of Europe session before potentially it bounces again. But everything but the Nasdaq was looking quite good. Quite heavy last night. The Nasdaq was, pretty decent. It's just everything else was looking a tad heavy. SPY is probably just going for broke, isn't it? There you go. What are we up now? 87. So it's just backing off slightly. All right, guys. Let's make sure nothing else there. So what I'll do, we'll call it a day there. MMS. Oh, look, what's that doing then? Macmillan Shakespeare. Yep, it has to hold above $9 in my view. Yeah, it's a lot similar, and see a lot of these that effort to get it, from the buyers to push it up just to get it above 10, off these key highs way up here. That was under pressure well before that anyway. That was under pressure from the end of last year. Just that sell-off in March just really kicked in that pressure. That hit. And that was a beautiful sell. Looking at that now, hindsight's the best trader in the world, isn't it? Even off, you can see on the weekly it was extended to the downside around here through the new year, into the new year, and then just got smacked with the overall market. So it's not, that's a good reason why you, first and foremost, you're looking at action, price action, and what is it telling you? Not just, it's oversold, so I don't want to sell it. Overbought. I use this pressure depending on, obviously depending on what the chart's telling me as well. And if that's looking like it's not going up at all, there could be another wave down. And when, the pressure doesn't mean too much, or the stochastics don't mean too much when the market's really biased one way or another, up or down. Because if it's biased up, there's next to no sellers in the way, and then people will be chasing it. So that just because then it could do that easily when it's overbought. All right, but if you start getting, you can see the sellers coming in when it's overbought. That's a different story. All right, and that's typically what I'd be looking at is around levels like that. It's probably overbought there. Just because it's overbought doesn't mean you want to sell it, but you can see that it was failing. So that's where that analysis, where you start to fail at a level, at a zone, when it's overbought, that's different. And then you're looking for your sell. But when it gets down to here and it comes down, and you can see that distinctly on the weekly and on the daily. If you're looking at the daily, distinctly starting to fail here into support, that's not a good sign. and especially, with good pressure up, that was here, goes nowhere, doesn't get past there again, doesn't get past there again. So it's getting sold. Whoever is selling it through here at around 1350 is not waiting to see if it can get any higher. They want out, and they want out now. Well, at that day anyway. All right, so you can see why it's important just to take into account the price action. And then sooner or later, anyone that's waiting for this, if you bought it, I don't know, say you bought it above 15, you watch this bound push down here, and you're waiting for it to get back to 15 at least to get a break even trade. And you're watching it. That's why you get that sort of capitulation, because people sooner or later, if they've got a bigger risk tolerance, sooner or later have to give up as well. Otherwise, you've still got it now, and you're down at $9. You've weathered the storm all the way down to 5. From, say, you bought it at 15, you're down whatever percentage that is, a lot of percentages. And you're just hoping now, and it doesn't mean we're going to get back up just because we've had that big sell-off. We could get hit again, and you're looking through 5. I don't know anything about this stock fundamentally. It could be a basket case at the moment. That's why we're seeing that good selling. So yeah, it's interesting to take note of that price action below the MAs on the weekly and the daily. What's it telling you? Don't worry about it being so much oversold. And that's why I'm always keen to work off the shoulder. If you're working off that shoulder there, look at this prime spot in here after we break through those lows, considering what's happened previously on both the weekly and daily. At that stage, we're hovering down that oversold territory. We're oversold in the weekly too, but when things go down on stocks, they go down fast and they come up. Right, so when they go down, if you know you're going to be right pretty quickly, if you're going to short sell it at least. But at that stage, if we break below that low, you do not want to be in that stock if you're long. Okay, because we've held, just above this low at 12. We held, we're starting to attack 12, and if you break 12, you got all these stops from way back here. It's a key level, which is, if it breaks that, game over, which is pretty much, it was game over, wasn't it? Couple that with what was happening in the markets then anyway. Yeah, so we'll call it a day there. Anyway, thanks very much for joining us, guys. I hope you enjoy. If you do, it'd be great if you can leave us a like, help spread the love a bit. And then, just watch out on YouTube for any more videos and bits and pieces we start to pop up. There, guys, enjoy your day, and we'll speak to you again hopefully tomorrow at 9:40. All right, enjoy. Bye.